So last week I told you guys that if Palantir, ticker symbol PLTR, could not stay above 184, then look for a pullback down to 178. And if 178 failed to hold that support, then look for a further pullback down to 171. Take a listen. Let's go ahead and begin with Palantir, ticker symbol PLTR. So current support for Palantir is going to be at 184. If the stock cannot stay above this level, then I want you guys to look for a 4% pullback down to 178. If 178 breaks, then we're looking at a pullback to 171. So looking at the current chart, you guys can see that my analysis was 100% accurate. And in total, that was a pullback of over 8%. So that was quite a substantial pullback. With that said, were there any clues that Palantir wanted to pull back? The answer is yes. And there were actually two main clues. One, this was a resistance zone right here at 188. And two, the stock was inside of a bearish rising wedge pattern heading into that resistance zone. Now, if you're not familiar with a bearish rising wedge pattern, it usually plays out like this. And going back to Palantir's chart, you guys can see that is exactly what happened. Now, last week I also told you guys that if ticker symbol TTD, the trade desk, could stay above 50.81, then look for a run to 54.40. And if the stock could get above that level, then look for a run to 56.70. Take a listen. Now to the upside, as long as the trade desk can stay above 50.81, then I want you guys to look for a 5% run to 54.40. And if the buyers can push the stock above 54.40, then look for a run to 56.70. So looking at the current chart, you guys can see that we were just a few cents off from hitting that target at 56.70. With that said, I still count this as an accurate price prediction because we were able to get within this zone. Now, were there any clues indicating that the trade desk wanted to go to $56? The answer is yes, and that is going to be this bull flag right here. Now, once we do get this bull flag breakout, all that we want to do is to measure the flagpole. And once we do get the measurement of the flagpole, we're going to take this point up to this high. And that is going to give us our overall range and price target. Now, Wells Fargo says that they're still leaning into the AI theme, but they are trimming and diversifying their exposure. Take a listen.
Meantime, let's get back to the broader markets and the S&P and the NASDAQ taking a breather from these record highs. Joining us with his outlook today, Wells Fargo Investment Institute Senior Global Market Strategist, Scott Wren. Scott, it's good to see you. I am curious, though, short term, 3 rejections of 67.50 since Friday. What's it going to take to push past some of these levels?
Well, you know, Carl, at some point we are going to get a few rejections of these higher levels, and I think the market's probably still it's going to inch up here a little bit more.
Now, based on my analysis, that is what I also see happening.
But what we've been doing, and I think the risks of a pullback. Not a 5% pullback that can happen on noise, but something a little bit bigger. They've increased. So what we've been trying to do, we had been overweight communication services sector, for instance. We felt like there was fully valued, that sector was fully valued. We've been trimming there. Small caps have done well. We've been trimming there. So we want to continue to lean into the AI play. So we're overweight technology, but we shifted some of the money we took out and looked at AI in a different way, and that's, industrials, utilities. So those are some of the sectors that we've rotated money into, and I think it's a little bit of diversification. You guys were just talking about financials. I mean, that's our most overweighted sector. I agree with everything that Secretary Bessent said, and Steve said it's show me time for these community banks. I'm totally with that argument. So we're leaning into stocks, we're leaning into AI, but we're taking a little bit of what we perceive to be risk off the table and rotating into some other areas.
Now, going into the rest of the video, I have some important levels for you guys to watch on ticker symbol TSLA, Tesla, Apple, ticker symbol AAPL, and D-Wave Quantum, ticker symbol QBTS. Let's begin with D-Wave Quantum, ticker symbol QBTS. So overall, I am bearish on D-Wave Quantum, and I'm looking for a pullback down to 24.80 and then a pullback to 18.98. With that said, current support is going to be at 32.17. If the stock cannot stay above this level, then look for a 13% pullback down to 29.27. And if 29.27 failed to hold that support, then look for a further pullback down to 27.23. And from current price, we're looking at a decline of 20%. The next stock is Tesla, ticker symbol TSLA. So current support for Tesla is at 4.24. If the stock cannot stay above this level, then look for a 7% pullback to 4.02. And if 402 failed to hold that support, then look for a further pullback down to 380. Now let's go ahead and take a look at the upside. So currently we do have Tesla forming a bull flag, which could be an indication that the stock wants to go to higher prices. With that said, if Tesla can break above 443, then I want you guys to look for a 7% run to 468. And if buyers can push the stock above 468, then look for a run to my price target at 494. And from current price, we're looking at a return of over 13%. Next we have Apple, ticker symbol AAPL. So looking at the current chart, what we see happening right now is a breakdown of this bear flag. If the stock cannot get above 257, then I want you guys to look for a 1% continuation down to 249. And if 249 failed to hold that support, then look for a further pullback down to 243. Should 243 also fail to hold that support, then we're looking at a further pullback down to 239. And from current price, we're looking at a decline of 5%. Now to the upside, if Apple can get above 257, then I want you guys to look for a run to 260. And if the stock can get above 260, then look for a run to 267. And from current price, we're looking at a return of over 5%. All right, guys, if you like today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.